Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. As a kid, his 4 siblings nicknamed him Mouthy Matt. Your host and my dad, Matt Hansen.
Well, I'd like to welcome to our show, Harry Nima Zegarra. Harry's a full-time pulmonary and critical care doctor from South America. He started in real estate about 5 years ago and has invested in residential and commercial properties. Harry is the founder of Nima Equity. He educates other doctors about passively investing in real estate and helps them build wealth outside of Wall Street. And I got to note, Harry has an excellent YouTube channel called Nima Equity. Some great content out there. I'm a subscriber. You should too. Well, Harry, welcome to the show.
Hey, Matt, thank you so much for having me here. I'm very honored and excited to be here today.
Excellent, excellent. Well, tell us a little bit about how did you discover apartment investing? How did you run across that? Let's start from the beginning.
Absolutely. Yeah. I mean, it's kind of like a little bit of a long story. So I'll start it goes back to when I was living in Peru. So as you know, my wife and I were from Peru, and I'm a first generation college educated person, right? So my family, in the past, they didn't have the option to go to college. So they used to do different type of business, including real estate. So we had some exposure from that in the past. So when we came here to the U.S., so my wife and I, we both physicians, and so we came here to continue our training. So we're doing residency. Then a couple of years later, I was doing fellowship, the subspecialization. So we were always interested in real estate. It's just mainly because we were moving every 2 to 3 years. We were not able to get started initially, and also, you may say because of lack of education at the same time. I mean, what everybody thinks about real estate here in the U.S. is single family homes, right? So the fix and flips, short-term rentals, long-term rentals, all of that. So because of that is that, again, we didn't start until we came here to Dallas Fort Worth. So again, it was a long journey, again, in training and even in private practice initially. But then after I remember it was 2 years in private practice that we decided to move here to Dallas. And the reason being also it was a bigger city. My wife had a family here in the area, and we also had friends from back from Peru from medical school. So it was the perfect setup, right? So we arrived here to Dallas, and we love the area. Our kids love their school. So we decided to buy our residence, right? And pretty much and very quickly 2 or 3 months after that, we decided to jump into real estate seriously, right? And we started initially in residential real estate in long-term rentals. And then after a couple of years, and this is what we have been doing the last 2 years in the multifamily space, especially in syndications.
Great. So you're the traditional, okay, I'm going to do some residential, small rental type stuff. And then you discovered, so how did you discover multifamily? Because I was in the same boat as you. 30 years, my wife and I were doing flips and flips, on and off. And 6 years ago, I heard about on a podcast, oh, what's this multifamily thing? This is much easier. So how did you discover it? Because it's just not something you hear about on the news, and nobody talks about it, like you said. How did you discover multifamily?
Mainly again, through education, right? And also through life experience, right? So we came here to Dallas. We experienced so we were very interested in real estate. We were primed for real estate, and so we started acquiring single family homes, right? The first property we acquired 3 months after we acquired the property and put a tenant, the AC broke. So you can imagine the whole year in cash flow went out
in the one expense.
Exactly. So and initially we were actually trying to do that ourselves, to manage the property with just one property even. Right? So and you can imagine, right? 2 physicians, full-time jobs with 2 boys, two kids, and very active boys actually. So it was a nightmare initially, right? So you would the classic termites, tenants, and toilets.
Right? You were living that.
Which we had, we really like real estate, and we have a passion for it. So, I mean, it was not that difficult, but I mean, at the same time, it was taking like a lot of time. So half a year after that, we hired a property manager, and things changed. So we got the help from him. We leveraged his time, so we were able to even acquire more and more properties in that moment. And at some point, we went up to 9 properties, so
Wow.
9 long-term rentals in the Dallas-Fort Worth area, right? Which again, like by any means, I mean, it's growing. I mean, it was great, right? But I mean, like we were discovering that again, like it was becoming kind of like a second job, right? Like so, you can imagine, like even with a great property manager, I mean, every decision, every responsibility and liability is on you, and they're always gonna call you back. I mean, they're great. People and helping you with the property and helping like the tenants, but still the decisions are yours, right? So it was to the point again, like when my wife and I were talking about that and say like, hey, I mean, like there should be a better way to invest in real estate, right? Right.
It's not so much work.
Exactly. So we went back to education again, like, and that's like also part how we started like in single family homes. So we went back to education to do podcast, like to listen to podcasts, to listen to audiobooks, to go to meetups, even some conferences, and we discovered so like syndications in real estate and multifamily specifically, right? Like so we were very interested. And even though in this moment we're mainly active investors, we discovered that you can participate as an active, but also as a passive investor, right? Like, and even though many people may discover at some point that when you're active, you may be able to get a better return on investment at some point, but the question is at what cost, right? Like at what cost in terms of your time, in terms of your effort, in terms of your peace of mind, right? Like so that's where I mean, after a couple of months, we decided like to join a mastermind, a mentorship, and we decided like to join forces with other people who were experts in the field and who have been doing this for years, and some of them through different cycles even, right? Like so we decided like to join forces, and that's what we have been doing the last 2 years.
Excellent. Because you can fast track. And there's a couple messages there. First off is, yeah, you may be able to make a little bit more money if you're managing 9 single family homes. But what's the opportunity cost? I mean, you have 2 wonderful kids. I see them on Facebook all the time. It's like
Oh,
you
thank you.
don't get to spend time with them. You and your wife have very important roles in the world as doctors. You're busy doing that. And now you're going to manage tenant toilets and termites. Well, that's really good value. It's like,
Yes.
okay, I can make a little bit more money on that, but maybe I get 10% less, but I have all this freedom if I passively invest to spend time with my family and focus on my work and everything else. So that's a really good message. I like you
Absolutely.
hit on that. Right.
Yes.
People ask me, well, you can probably make more money on if you own 100 single family homes versus a 100-unit apartment as a passive investor, but do you want all that headache? Do you want the work?
Yes.
Are you going to enjoy life? I mean, it's time. You're right. I love that. You're trading your time
Yes.
for money. Really,
yes,
really.
like yeah, and like, and also I heard like so multiple times like in podcasts and things like that, like so people like in their 70s or 80s with 100 homes or 150 homes, and they don't even like remember that they have one or what were the addresses, right? Like so we were saying like, no, that's probably not for us.
No, that's a lot of moving parts. But
Yes.
as you mentioned before, one thing goes wrong, the HVAC, you're only making maybe 100, 200 a month in profit. Well, an HVAC's
Yes.
probably $2,000. You just blew your profit for the whole year in one expense.
Exactly.
Or the
Exactly.
taxes go up, or insurance goes. I mean, it
Yes.
is much more challenging. You don't have the economies of scales of a large apartment complex. There's just no comparison.
Absolutely.
None at all. And there's other thing that you mentioned I wanted to highlight is that you did join a mastermind, and you and I are part of the same mastermind. That's why we're friends.
Yes.
And you leverage other people's experience. So we're working with people that have been doing this for 25 years. I've been doing it for 6 or 7 years, but for 25 years. They've seen the cycles. They know what's going on. So if any
Yes.
situation comes up, they got your back. I mean, our partners have got our back because they've done it so many deals. It's so that really protects the investors from, okay, like I was a corporate executive. Now I'm a real estate guy. Well, I've been a real estate guy for a long time, but I haven't been in multifamily for 25 years. So I think that's a really good point is that, okay, you're not just
important.
investing with Harry or Matt, you're investing with our powerful big group that has lots and lots of experience. We have the best SEC attorneys, we have the best
Exactly.
insurance brokers and lending brokers and all that. So I just want to highlight that. I think that's a
Yes.
really good.
Yeah.
You and
That's
I both
absolutely.
realize we can't do this on our own. Let's leverage somebody else's experience.
Yes, as you're
Very,
saying, like to leverage like their experience and their time, and also like it's very different, right? Like when you invest in single family homes, it's you and your money, and you may be playing with a couple of $1,000s or things like that. But when you're talking about syndications and multifamily, these multi-million properties, I mean, like we're talking about millions of dollars, and not just your money, but also the money of your investors, which is very important for all of us.
that's absolutely right. Absolutely right. So what are you looking for you? So you work with a lot of doctors, which is great. You're helping
Yes,
busy doctors. I don't have
yes.
time to go out and do this, so you help them passively invest. What are the things that they typically look for? What do they look for in investment
Yes,
in real
so
estate?
I've been very blessed and grateful that in the last 2 years I've talked with many doctors in the healthcare field. So so one of the things is that many physicians and doctors they don't know how to invest in real estate, and they haven't heard like the word syndication before. So right, like it's initially starts as a part of as an education and giving people or doctors or high income professionals other options for them, right? Like because there's one saying that says like we tend to invest in things that we know or that we are
Mhm.
familiar with. And guess what? Here in the US, we all know only about stocks, the stock market, Wall Street, 401ks, and we don't know that there are other alternative ways to invest that actually it's called alternative, but actually they're more mainstream, right? Like again, like there it makes more sense, it's more
Mhm.
stable, and the rewards it may be better, right? So we usually start with that, right? Like again, like that. There's other ways to invest other than Wall Street, and the other thing is again like that they have options, right? Like again, like for example, in our field that is real estate, there's so many ways to invest in real estate, right? Like and always try to give them this option that hey, if for any reason you want to be maybe more active, absolutely. I mean, I can give you some prompts about that, like and guide you
Mhm.
towards that. If you want to be on the passive side, I can share with you all this information or education we have on our website or YouTube channel or other venues also, right? Like so they can take an informed decision, right? Like because at the end it's like again like your investors need to feel so comfortable with like the decision that they're making, right? Like so you don't want to make a rash decision because it's their hard-earned money, right? Like it's a big amount of money too what they invest. And the other thing is that the investment is going to stay like in the property for 4 to 6 years, so it's a big decision.
Right. Yeah. So education, and you do a wonderful job of
Absolutely.
that, Harry. I'm a big fan of
Thank you.
yours. But because you put it out there, and it's not salesy at all. You're just saying, hey, here's what it's like to passively invest in large apartment buildings. So you're educating people, and then they self-select whether, you know what, I didn't even know that wasn't a thing. And and you're putting out great content that, and again, people decide if it's right for them or not. But if they don't know about it, and
Yeah.
that's the thing is nobody gets paid to advertise apartment investing. I mean,
Yes.
Fidelity, Vanguard, they're all these big Wall Street companies, investment companies, have
Yeah.
billions of dollars of advertisement budgets. We have
Yes.
nothing. We just have word of
Yes, we
mouth.
can just not compete with them.
So I love the fact you're putting it out there to help people know you've got an option. You're not just locked
Yes,
into Wall Street. Because I was one of
exactly.
those people years ago. I had every 100% in Wall Street when I first started years and
I
years ago.
see. Yeah, no,
So
then the same happened to most of us. Yes,
yeah, because we just don't know any better. We don't know.
exactly.
So what specifically what properties do you like? What's your criteria for an ideal property that you like to bring to your investors? What markets do you like, and kind of what are the
Yeah.
criteria of the properties?
Yeah, and that's why exactly where the mastermind and the mentorship group comes
Mm,
with, right? Like so, we relied in our partners that have more experience than us, that are doing this full time, even, right? Like so, I mean, I always tell my investors, I'm a physician, I'm a full time doctor. I couldn't do this to just myself. I would doing myself and you a disservice if I try to do it to this myself. So we go with other investors who have been doing this full time and with a couple of years at least, right? Like so, and the markets that we look at are usually in the Midwest, Southeast, Texas, Arizona too, right? Like so, we're looking usually like to markets where we see population is moving, right? Like where businesses are moving, where the area is business friendly. landlord friendly too. So that makes a big difference at the end on how you're going to manage your business plan, right? Like so those are the things that we initially look like in the markets, right? In terms of the operators, because that's also fundamental and very important, right? Like so one of the things is again like the underwriting or the analysis that you make on the numbers. And that's great. Like in at the end, you close on the property and everyone is excited, right? Like, but after that, the real work starts actually, right? Like, and I can tell you because also in one of the last projects that we acquired, I'm part of the asset management team. And believe me, I mean, if you try to do this well, I mean, it takes a lot of time to, right? Like, so that's important, right? Like, so I mean, I always, and lately, at least in the last year and a half, I'm asking if the asset management team is doing this full time, right? Like if they have experience like before, and if they live in the area or at least close, or at least if they are able like to travel like kind of often.
Right. Because you're right. People think of, okay, when you buy the property, you're done. But I would say, as a passive investor, because I passive invest in a lot of stuff too, it's the asset manager I'm most concerned with, because the
Yes.
asset manager it's a part of the general partner team for those that aren't familiar with it. So the general partner team, the people that run the deal, then one or two of those people are designated as asset managers. So they're going to stick with that property for the next 5 or 6 years, and they're going to meet on a weekly basis with the property manager. They're going to deal with all those headaches that you did as a single family homeowner with the property manager.
Yes.
Our asset manager is a central person, so they're not talking to the 3 or 4 general partners. But that role is so critical because first off, who is it? Are they a business person with lots of good experience of running a business, understanding profit and losses and economics and key performance indicators? And do they take action, follow up? And then most importantly, do they have a backup? Is there somebody,
Exactly.
what if this person steps away? And this is where I got in trouble years ago. I've told the story of it. I passively invested in one of my first deals like 6 years ago. And I invested in one guy of the 3 partners. He went away. He left the deal. He said, I'm going to
Oh
do something
God.
else. And the people he left with didn't know anything about running apartments, and they ran it to the ground basically.
Oh,
So
I
I
see.
always now
Wow.
vet not only
That's
the
what is so
primary asset
important to
manager,
have.
who's the backup? Like you said,
Yes.
what's their expertise? Who's going to pick up the show if this guy's out, or if he wants to go on vacation for a month? So I love
Yes.
the fact that you pointed that out. That's probably the most important person,
Yes.
along with the
Yes.
property manager.
Absolutely. Yeah. And we have seen this in the last 4 to 5 years that like everything was great, right? Like so, even with not a stellar asset management team, I mean, like things were still doing good. That's going to change in the next few years, right? Like so, that's why picking a strong team, general sponsorship team with a good asset manager is so important now.
When the economy is booming, it's easy to make money. When things get tough, is when
Yes,
you really want that person that's seen a lot of issues in the past and knows how to handle those. Really good point.
totally agree.
So when you're speaking with investors or potential investors, what are the typical concerns they have, which they all do? Like, what is the primary, like, okay, I'm not really sure about this, or this. What are the typical questions you get that you could help
Yeah,
educate people on right now?
yeah. So again, like, so the most important part again is like the lack of knowledge about like this type of investments
Right.
and how they work, right? Like and their participation or no participation in the decisions on the day to day of the project, right? Like so there's something that I always, it's important for me to pass this information to any possible investor, right? Like I always say, like these are the important things that you should consider before investing in a syndication, or why you shouldn't invest in a syndication, right? Like so one of them is that is big money, right? Like so is we're talking about their hard-earned money, right? Like and they need to prepare for that, because that money, like again, like it's at least $50,000 or $75,000 in most situations, right? Like so it's not like easy like to get in, right? Like so like the next step, like that I always tell is again like it's going to be an illiquid investment. So like and that means that again, like it's not like the stock market or mutual funds or even REITs, right? Like if you change your mind, like in a couple of days or next week, you can just sell your stocks or shares, right? That doesn't happen here, because we're talking a physical asset, and it stays and it's going to stay there, right? Like so you need to think about that your investment is going to stay there, or your capital is going to stay there for the next 4 to 6 years, right? And always life happens, right? Like again, like I mean, like
Yeah.
I may think like I want to build a pool in my house like for next year, or my son is going to college. So if I'm not prepared for that, I may have some problems in the future, right? Like so those things are important. And the last thing that I always tell also is it's a passive investment. for good or for bad, it's a passive investment. And I was tell like at the end, like, hey, but actually that's even better, like because you don't get all the headaches and you're leaving your investment with someone who is an expert in this and has been doing this for years and is doing this every day. So that's one of the things that I try to educate before someone gets or jumps into the investment.
Wow, you're good. That's great. That's wonderful stuff. And it's really because it's not right for everyone. You're absolutely good points. Like, okay, your money's going to be tied up for 4 to 6 years. So if you have a kid going to college in 3 years, you need those funds. Don't do it. Or like you said, if you're planning for a big expense or something else going on,
Exactly.
that's really good that you are very transparent, Harry, and saying, okay, guys, this might not be for you if this is your situation. So I love that you're so transparent.
We always want to try to be good stewards of their money. And also, like at the same time, I mean, we're not in this business for 1 or 2 deals for 1 or 2 years. We're thinking about this for the long term, right? Like, and we want to establish good relationships with our investors. We want to build the friendships with the people that we work with.
Yes, absolutely. Because they've got to trust you and they've got to know that you're going to do what you say you're going to do and that you've got a good team. So, and I know you have a good team. Here's another question for you. What are some of the challenges you've experienced as a passive or an active investor in multifamily? What challenges have you run across that you've had to overcome?
Yes. So I can tell you it's like everything in life when you're starting requires time and effort, right? So like I say, anything right? Like when you go to medical school, when you try to open a restaurant, it was like the same with us, right? Like, so we were very primed for syndications and real estate to join this business. But again, like you can imagine, I'm a full-time physician. So I needed like to put extra effort at the beginning, right? Like, so, but it pays off, right? Like, again, like you find yourself in a business or in a field that you really like, that you're passionate, and that you feel that you're making some good for other people, right? Like for yourself, for your family, but also for your investors, and finally also for the tenants. So that was like 3 things that were excellent for like in my case. Like the other thing, like as you mentioned, like challenges, right? Like, so is that and I have seen this a couple of times, that some people like think like, oh, like, so a doctor should be only a doctor, or a lawyer, only a lawyer, and always continue being a lawyer, like in their 9 to 5, right? Like, and if you're trying to do this, maybe it's not going to last, right? Like, so, I mean, this kind of mindset things, like of some people that they don't necessarily like, believe that you're going to be serious about that, right? Like, so, but then again, like you show them, like you are serious, you put your effort and you put your time and you deliver also, right? Like, so it's very important to keep like your word with your investors, but also with your lead sponsors or syndicators.
Yeah. And you do a great job of that here. You demonstrate the fact is that you really know multifamily syndications. I mean, I consume your content. You really do demonstrate that. And I think that's
appreciate
really great.
Thank
really
you.
Great. Well, that's really good stuff. We're now going to go into a little bit lighter, fun stuff. It's called the lightning round. These are just 5 fun questions.
All right.
To know Harry a little bit better. Are you ready?
Sure. Let's do it.
Okay. The first one is, what was your nickname as a child?
Oh, it's in Spanish actually, like the el erizo, like so my hair was like kind of thick, so I used to have like a thick hair, so like everyone was making fun of my hair. So I mean, in Spanish is el erizo, like the porcupine.
Oh, okay. So it would be like porcupine in English then.
Yes.
Okay. So your nickname was porcupine basically because your hair stuck up and it's so thick. That's great. That's a good one. Okay. Are you a morning person or a night owl?
Can I say both actually?
Yes, you can. I mean, people have a natural tendency, but I'm sure in your line of work, do you have to work both?
And what happens? Yeah, and what happens is that I love mornings. I mean, actually, like I'm the first one to wake up in the morning here at home. I mean, and the reason is like because I like to do stuff in the morning, like and to run, to go for a walk to the park, right? But also because of my line of work, you know, like I'm a physician and ICU doctor, and many times I work in shifts, and these shifts are at night. So I mean, like I find myself sometimes at midnight when the work goes down, like just doing stuff on the computer or reading something or watching videos. So kind of both actually.
We can't put Harry in a box. So I'm taking a survey after I've done like 200 interviews. I'm gonna show the poll. So I'm going to put you as both because you really are. And I think that's the nature of your business, that your
Yes.
career is really, you've got to be both. So very
Yeah.
interesting. Okay. What would be the first thing we would do if you won the lottery?
I got that question before from someone else, and
Oh,
I would say, and my answer is gonna be the same. I would do the same. I would do the same every day, right? Like because and many people think that I'm doing real estate now because I want to leave medicine, but that's not true. So I mean, I actually still love medicine. I still enjoy being a physician. It's just that I just want to have a better balance in my life and with my time, right? Like so, I would probably continue being a physician, probably better part time, but also being involved in real estate. So I would do the same, and maybe like the only change it would be like to travel a little bit more with my family. We really enjoy traveling. I mean, actually, this year has been the year that we have traveled the most. I think we have gone to 4 or 5 trips already this year, so it
wow.
was really good. Was really good, and those are the important things, right? Like the things that you keep for yourself, like in your memories and with like as a family. So that's very important.
I love that. It's about experiences. And I'm the same thing, Harry. Like in my point in my life, I don't need any more things. It's all experiences. So we do a lot of
Exactly.
traveling with our kids, our adult kids, even that. So I love that. That's great,
Yes.
Harry. Okay. If you could live anywhere in the world, where would it be?
Oh, that's a difficult one. Because like we love the US. I mean like and like right? Like we're from Peru, from South America.
Mhm.
We have been living here for 15 years. We love the US. We consider this home now. Both our kids were born here. But I don't know, we love the Caribbean a lot and the beach a lot. So we'll be somewhere like in the Caribbean, right? Kind of the Bahamas or Mexico, somewhere around there.
Yeah, I love vacationing there. We've
Yes.
probably been to 15 vacations in the Caribbean over the years. So good.
Yes.
I will visit you wherever you live there, Harry. I'll
Yeah.
come and visit for a
I'll send you an
weekend.
invitation.
Okay. Okay. And then the final question is, because this podcast is called Better Returns.
Yeah.
What is the one piece of advice, if you could only give a new passive investor one piece of advice to get better returns, what would that piece of advice be?
Yes. Education, and also invest in yourself. That's the most important thing, and where you're gonna get like the best return on investment.
Well said. Well said.
Yes.
Thanks so much. Thanks so much. Okay, so finally, how can our listeners find you? Where can they find you on social media?
Yes, yes. Thank you so much. We have our website, which is called Nima Equity. So it's N as in Nancy, IMA equity.com. And also, as you mentioned, we have our YouTube channel with the same name, where we usually it's a free channel, and we try to bring again like awareness and education about like in general, like real estate in general, but specifically in syndications and multifamily.
Excellent, excellent. And all that information will be in the show notes so you can contact Harry. Thanks so much for being on the show. I truly appreciate it, Harry.
Thank you, man. Had a blast.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.